You've been right, but what do you see happening now?
Well, I mean, it's natural that we're going to see a pause, and I think we could be at the very early stages of that pause. But I want to make it clear that this is a pause that will refresh the market somewhat from, I would say, slightly overbought conditions. And a lot of that optimism that I have for the balance of the year is really circled around the Federal Reserve, which has really gone from being a headwind to now a tailwind.
There seems to be a school of thought that the market gains for the year have already been put in.
Yeah. I don't agree with that because I do think there's going to be a catch-up in corporate profits. I think the fourth quarter was a little bit jarring for a lot of corporate CEOs, and the guidance was somewhat tepid into the first quarter. So much of that, they're responding to the markets somewhat and the uncertainty around trade. And at that time, the Federal Reserve, which was really giving a very mixed message about what they were going to do. I think it's very important to note that I think Chairman Powell has found his voice. He did what most Fed chairmen do when they're new in the job. They make rookie errors. And again, I pointed out that Alan Greenspan, presided over the biggest collapse in the stock market that did not result in a recession. And he had just come in the August before the crash of '87.
And today we've got what used to be called the Humphrey Hawkins testimony,
Right.
Jay Powell in Congress. How much of the market's run going forward is going to be reliant on Jay Powell remaining a little softer on rates?
I think it's extremely important because that will allow the markets to catch their breath somewhat. It will allow, I think, if we do get a successful resolution on trade, that's going to be extremely important for a CapEx cycle. You have all the ingredients in place of now even lower interest rates, making stocks more competitive with bonds. And also that, companies are going to allocate capital because they have a corporate incentive to do so with a more favorable tax code.
It's like December never existed for the stock market.
Well,
when we're falling 400 and 500 points in a day, volatility soared, and all of a sudden the calendar switches and we get this market rebound. What happened?
You just run out of things to sell. That's how capitulation, that's the definition of capitulation. We talked about it on the 27th of December. Everything that wasn't screwed to the walls was being thrown out the window. And, when you get to that sell everything because I can, that's typically a market bottom. It's unusual to see it at year end, but it's not unprecedented.
You think the S&P ends the year higher than it is now, though?
I do. I had said between 10 and 20%. We're more than halfway through that. So we've already gotten, at the low end of where I thought returns would be. And I think we could easily get to the high end.
Perfect example of why you got to stay invested, right, Dan?
You do. I mean, nobody sends the memo around when to get in or out. You just got to stick with it.